Hello, this is Patrick White from AA Commodities and Investments with your Friday, August 14th morning market update. Grain markets are a little bit lower here overnight. We've got December corn down 2.5 cents here at 336 and a quarter. November soybeans are down 4.5 cents here at 895, and it is 7:38 a.m. Corn is taking a little bit of a breather here with some light selling this morning after trading significantly higher on Thursday. Traders will show an overall short covering bias here after the not bearish enough WASDE report on Wednesday. In addition, traders are covering short contracts here as they try to consider what factors the recent derecho storm had on fields here in eastern Iowa and how that will affect yield going forward. This is my take here on the derecho storm. We had over 10 million acres affected, and that is significant. However, corn can come back here when it's down as long as it's not completely snapped off. I believe that anywhere from 20% to 100% of the yield in some isolated areas is gone, but I believe most of that is in that 20 to 25% range. The damage isn't really like a drought here where it gets worse and worse each day. It's a one and done isolated event. So I guess if anything, the expectation would be for the crop to get a little better, but I think it's going to end up taking a decent chunk off of our carryout here for the new crop corn. Probably around that 300 to 500 million bushel area would be my top end of estimates, but that's still a far cry from having a national shortage of corn. I mean, the issue is it definitely could cut yield and cut the crop progress or cut the crop condition ratings here on Monday, and it could cut yield in subsequent WASDE reports here. But for right now, it's certainly a far cry from a shortage. So soybeans are lower here this morning, and just like corn, taking a little bit of a breather here from yesterday's run. The November contract did go up and test just above the $9 level yesterday, up to 902.5, but they found sellers there. Traders are still keeping the market bid here on the expectation of continued stronger export demand from China, as their hog herd has been rebuilt faster than many had thought. This weekend, representatives between the U.S. and China are set to meet and air their grievances with the Phase 1 trade deal, and the market could have a larger reaction on Sunday night if this meeting goes poorly. I'm expecting it to go routine, but you never know with 2020 and the way headlines are here these days. So that's what we'll be watching over the weekend. So that's all I've got for today. Have a good end of your week and a good weekend. Remember that there is significant risk in trading futures and options, and it is not suitable for all investors. For more information on commodity markets, give us a call at 712-262-7606.